Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Veterans Day, November 11th, 2019, just after 4 p.m. Central. I guess it's standard time now. So in talking to you, I first want to wish all of you that are vets out there the best and thank you. I have family that are in the service. It's great. So thanks. All right, and looking at the market. If this was an attempted break, you got to be a bit cautious because the market didn't do very much. And admittedly, a low volume day. Now, we do have the first of the hearings beginning on Wednesday on President Trump's accusers. Maybe that's the right way to phrase this. We also have, and it's going to get lost in all this, that Fed Chair Powell is speaking before the Joint Economic Committee of Congress, first time he's spoken before them. And then on Thursday, Fed Chair Powell speaks before the House Budget Committee. I'm just wondering if they're going to ask him about the impeachment proceedings, what the Fed is doing to prepare for it, one way or the other. Things of that nature. We know they're going to get drilled on interest rates. We know that they're going to ask their best about world trade that they can. But the elephant in the room has to be the ongoing impeachment inquiry. Energy markets were down, and take a look. You were down hard in that gas. This is with us about to set record-breaking temperatures. I was just looking right around the lake, Gary, Indiana, which from here is 30 miles away. Tonight they'll have, I think, 10 below zero. With the wind chill. I mean, that's pretty severe. We're going to set records here. We've got snow on the ground. You would swear it's a December day, not November 11th. Winter's 40 days away. In any case, let's take a look at what we have. On the weekly area chart of closes, you can see how the market's got this continuation of going up. Number one, you can see the waves of it. You're down a little bit for the first day of the week. That's okay. You're still at an all-time high close last week for the week and down just a fraction. When we take a look at the chart, I'm still going to go back to what I told you. If you use your imagination, because that's what chart patterns are. Think of a head, a shoulder, right through here. You can almost draw it like that. Another shoulder, and the market is taken off. There's big upside counts if that's the case, because one of the things you do is you take the low. Let's call it the 2860 range to this shoulder, which is the 3020 range. So that's 140 points. So the first step I'd have is around the 3160 level. That'd just be taking the top, flipping it over. Price counts, which we offer, are something different, and they extend much further than that. But that's my first looking at area. When I look at the swing line study on the daily chart, so now we've swung here from looking at the daily bar with nothing on it to the daily bar with the swing lines, I have a pattern of higher lows, higher highs. That's still bullish. What stalls that pattern out? Taking out 30.7250, the last break low, would stall it out. Could that turn the market in terms of the swing line down? It could. Because if you don't take out 30.97, last week's high, you could end up with lower highs and then a lower low. Okay, what about the filter on it? Well, the filter is the 18-day average of closes first. And because it's at 30.40, to get this market turning to a downtrend, you'd have to do what I just said, not take out 30.97, take out 30.72, close under 30.40, then these lower numbers come into play. It's a lot to ask. I'm not saying it can't happen. What's more likely is if, and that's the word if, and I don't know if it's going to do it right now, it's got the bullish pattern. If it takes out 30.72.5, you could go into a stall of the swing line down, the bias up. What if you don't take this number out, 30.72.5, and you stay here, you try to work higher? Then the upper Bollinger Band becomes one of the resistance zones, and that's 31.09.5. So what we have at this point, when I look at momentum, is an embedded slow stochastic reading. What rules the day if you're a regular viewer here? Throw away everything else I just said, everything. Until this red line that makes up this number, there's two numbers, as you can see, closes under 80. I say the bulls have control of the market. They'll use pullbacks even under 30.72.5 to be buyers of the market looking for new highs. They'll change their strategy if you look at that number. How do I know? Well, I don't know what everyone's going to do, but I know enough that when you see an embedded reading and you lose it, you often get a correction in the market back towards the closest moving average, and that would be the 18-day. When I come to the NASDAQ, I've got the same pattern. I've got higher lows, I have higher highs. I didn't expect an awful lot out of this market today and didn't get it. Down 7.5. It is Veterans Day. A lot of traders off. I went down to the trading floor. There's nobody around. And that because most of the pits, the euro dollar, the biggest pit, nobody, they're not trading. Cash markets are closed today in observance of the holiday. So when we reopen tonight, you'll get a better feel for where we're at. Again, until you lose the embedded reading, I consider pullbacks in the market still going to be gobbled up by the pros. Dow, the same thing. I think the pros were waiting when the market made the lower low. I think they stepped into the market. You have a fresh embedded reading. I think the market's looking for this 27,767 level. And again, you can use your imagination if that's a head, that's a shoulder, another shoulder. It's not the cleanest one I've ever seen, but I think it's there. In the Russell, the market still has the pattern of higher lows, but it's got lower highs. You see that? So again, this market, not quite the strength of the others, and that I expected. Why? Follow me. See this number here? We closed losing both numbers over 80 on Thursday of last week. That's often a sign the market's going to weaken. Here's the market on Friday. Here's the market today. Now, let me tell you what I think is a positive out of this. Price, since it's happened 3 days ago, Thursday, Friday, and today, what's happening is this 18-day average is galloping towards the market each day, with prices pretty much holding where they were. So the big move down that this often precludes doesn't seem to be there as I'm seeing it. I can still see the correction setting in. I do not see the market regaining its embedded reading. So this is the one market that's the weakest, and I'm still calling for price in the 18-day average to potentially make a run at each other. But I've got 3 other indices that aren't breaking much. I don't want to see this high taken out if you're playing that side that you lost the embedded reading. In the VIX, all you've done is rally back to the line in the sand, as you know it, that 18-day average of closes. What about where these slow stochastics are? Both numbers are under 20 today. Both were under 20 on Friday, and they're under 20 on Thursday. So until you lose that reading, it's saying that these rallies are getting, in my opinion, sold by the pros. And they're still looking for lower prices, potentially the lower Bollinger Band. Getting to those numbers on the downside is not as easy as it sounds, and here's why. If you go back to last year's range, you're at the top of it. And making big moves down, very, very difficult. It's a lot easier for this market now to rally than break, but technically it's not saying it wants to do that yet. In the T-bond market, this is called riding the lower Bollinger Band. You get under it, you get back over it, you come back down to it, you're just riding it. In the pattern, you've got lower highs, lower lows, and you are oversold. So I can understand this, why the market's doing that. It's got an awful lot of data on the impeachment inquiry. It's got 2 speeches. Well, they're not speeches, they're testimonies by the Fed chair. That's an awful lot that you got to deal with this week. Same thing in the 10-year note. Oversold in this market, riding the lower Bollinger Band in a downtrend. TLT doing the identical thing, lower highs, lower lows. All 3 are oversold. So what we're looking at there is oversold. Doesn't mean they're not in a downtrend. And in the dollar index, we made a run up last Thursday, got as high as 98.07.5, took out this upper Bollinger Band. Then the market went a little bit higher, 20 points higher, and now it's given back most of that. It's about where it was when it hit that. That's what I'm pointing out. You're overbought at a resistance point, support's back at 97.48. The bulls have controlled the market, but it's hit an upside target. It is similar to the eurocurrency, which is in a downtrend, has hit its lower Bollinger Band, oversold, just sort of drifting right now. Drifting can go lower. I mean, other than it being oversold, you're just sitting here whistling Dixie. If you get a good rally, I think the pros are waiting to sell the market if it gets out of the oversold condition. If it embeds, it gets even worse. In the British pound, we saw that Mr. Farage, I think I'm saying it right, Nigel Farage, he has stepped back and given his support, if you will, to Mr. Johnson. That's 300 seats in Parliament, roughly, that now go on to the other side of the equation, and the market liked what it heard, so up 70 points today. But we know that the market hitting the lower Bollinger Band, that was the first objective, and all the market's done is stalled out there, and it's gone back to that line in the sand. What is the trend? A higher high, lower low. It was in an oversold condition. Now the market is correcting that oversold condition. Still not trending, in my opinion. Japanese yen still in a downtrend. Lower highs, lower lows. As it hit the lower Bollinger Band, it's bounced away back up to the 18-day average if traders were selling it. I'm not saying they were or weren't, but that's the line in the sand. It's come back down for them, but again, you're back in a profit area. In Bitcoin, the trend is down. You have lower highs, you had lower lows. This low hasn't taken out that one yet, but it need not. It's already closed under the 18-day average, so until you get back up and over 95.15, the bears have grabbed control of this market. Momentum's on their side, bias is down. If they wanted to get a washout, you could argue wherever that lower Bollinger Band comes in could be it. If the bulls want to stop this break, they got to fight this battle right where they're at, that 18-day average of closes. In the Brent versus WTI crude, we had a good rally, as you know, right up to this point, and that was last Tuesday. Then the market started pulling back towards that line in the sand, the 18-day average of close. That's the difference between the Brent and the WTI price. The market Thursday got under it. You had a small bounce, but it's just hanging right at that number. So this isn't to surprise me. It's also not giving you a real good direction as to which way these markets want to run. So I'm going to go to the charts. I see an overbought market. The numbers are not over 80. I see a market that hit the upper Bollinger Band. First time was after coming back to the 18-day average here. It did the same thing here, fell back to it. And that's the resistance point. And I realize traders are all trying, and I hear this so often, Ira, I want you to do longer term stuff. Folks, I don't do anything that the chart's not saying to do. If the market says it's going to continue in bed, do something with it. It's not what it's doing. It's overbought, looking like it wants to correct, and it might go to the 18-day average. Bingo. And now the battleground is on. You still overbought in an uptrend. Resistance, the upper Bollinger Band, support down here. Take out 66 though, and don't take out 63.32, and the chart rolls over into a bear configuration. In the Jan WTI, same thing, higher lows, higher highs, didn't quite make it back into the support zone. Now to get there, I'm a little concerned because you've got to keep your eye at this 55.77. If you were to take that out and close under the 18 and the 100-day average, you all of a sudden get the market into a bearish configuration. Now here, if I look at the slow stochastics, both numbers were over 80 today. Both numbers over 80 on Friday. Not so on Thursday, just plain overbought. Could turn bullish tomorrow. A strong day tomorrow could embed the slow stochastic, and I wait and see if it's going to do it. In the gasoline market, I have divergence. I've got momentum pointing down. I have the trend up with higher lows, higher highs. I have a market that again went to that upper Bollinger Band, pulled all the way back to this line in the sand, fighting a battle. And what you don't want to see taken out is 157.73. If that were taken out, you could have lower highs, lower lows, calling for a challenge first of the 100-day average if it wants to break further, and maybe the lower Bollinger Band. But I see divergence. Nat gas, I realize that you get caught up with all the fury in the market. I've got 5 decades of doing this, and I realize, and by the way, that doesn't mean I'm right after 5 decades. I'm looking at a market that I think when I see a rollover in the slow stochastic that happened on Friday, and this was Friday's action, that the market potentially has the setup to go back to the 18-day average unless it re-embeds. I have the same weather that you do on the news. They're talking 300 record-breaking temperatures around the country. I was listening to the Weather Channel, watching all that. All I know is the chart. When you lose an embedded reading, the odds favor price is going to try to make a run at the closest moving average. That number today was 262.30, and you finished 263.70. The trend is still what? You would say up? No. Now you've got lower highs, lower lows. You got to remember to look where you're at, but you're above the 18-day average, so the bias is up. The market has met the downside when you lose an embedded reading of trying to get to the neutral spot. You haven't yet done it in the Russell. So you've heard me mention that, but it's the same theory regardless of what you do. You haven't seen this from me, so let me show it to you before you go scooting away. These new micro stock indices, I have been using them in my updates recently, and I'm talking the ones that I write for my clients and say buy here, sell there. And I like them. And the reason I like them, number one, the volume's big. It is not a new contract that didn't, from the gate, explode in a massive way. This is what Bitcoin people were hoping would happen. Well, it happened in the stock indices. They're 1/10 the size. Now you might say, well, the commissions will eat it up. No, it doesn't if your firm adjusts to the commission. We're $1 a side. So when you look at the market and the minimum tick's $1.25 on the S&P, you're one side covered. At 2 ticks, you've paid for your commission. That's 2 ticks. That's a half a point. Come on. So the idea here is that the exchange wanted another product that offered the same underlying move, if you will, but 1/10 the size, 1/10 the margin, 1/10 the maintenance, 1/10, 1/10, 1/10. We took it down for ourselves here that if you're a self-directed trader, the exchange fees are 1/10. They cut them way down. Our commission, way down, $1 a side. And we do offer a very big-time discounted rate if you're self-directed and working with a broker. So you can't say that there's not a way to play it. And I think that it makes a lot of sense because you're not panicking every time you get a 150, 200 point move in the Dow or 25, 50 points in the S&P, and that happens at these prices all the time. This might be a way that you handle the risk in a different way. To find out about it, you can go to our website, www.iraepstein.com, but you got to put in your address bar on the top, /micro. You can in an easier way get to the information by clicking right here. If you're watching this icon, it's going to take you there. And of course, the old-fashioned way, talking to my staff about it, they're here typically between the hours of 7:30 to 4 or 5 in the afternoon. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.